Time now for the markets with Leighton, and you say the government has lowered the corn ending stocks.
That they did back on Monday. Brian Williams will have some analysis coming up. Also ahead in the markets, the cotton figures and the supply-demand estimates were overshadowed by the Cotton Council survey. Box beef prices retreat and hogs enjoy strong demand here in mid-February. We begin in row crops with a look back at what Monday's supply-demand report had to say about corn and soybeans. Extension Ag economist Brian Williams joined me Thursday morning to review the numbers. Brian, could we call the numbers on the corn side of the supply-demand report kind of the biggest headline?
I think so. I think the corn was the biggest player of all of our major crops.
And what were those numbers placed at?
Well, we had the corn stocks were placed at about 1.48 billion bushels. That's down quite a bit from the 1.63 in the January report.
What would you say was the primary reason or reasons that that cut was made?
The big mover was exports. We exported 150 million more bushels than what we were expecting.
What about their price projections? Did that change much in this month's report?
It did. They bumped up the price projections by an average of 10% over the January report. So right now the average is 450.
All right, well, turning to soybeans, what was the update on the soybean projections?
Well, there is no change on soybeans for the February report.
So basically any reason for why that, because that's a little bit unusual, isn't it?
It is. I think the market and most experts were expecting them to decrease the ending stocks, but really all they did was just kind of move things around a little bit.
All right, and the price forecast for beans, how did that come out?
They increased the price forecast by about 20 cents up to about $12.70 a bushel.
All right, I've seen some reports about potential U.S. soybean sales to China, some new exports. Is that kind of picking up?
Yeah, and even in the report, we had a 15 million bushel increase in exports, and the export market seems to be strong. There's a little bit of concern now with Brazil's harvest picking up, and they're going to start putting some soybeans onto the market to add some competition in there, though.
So it looks like exports will be strong for soybeans, needless to say.
Yeah, they are.
And finally, what are you expecting prices to do for soybeans overall as we get closer to planting time?
Overall, I'm not real bullish on the soybean markets. Looking at the futures market, the big interesting thing I see is that there's a $2 differential between the March futures contract and the fall November futures contract.
As for cotton, Dones reports the WASDE numbers were a little negative for U.S. balance sheets while being a little positive at the global level. The National Cotton Council's 31st annual planting survey, released back on February 8th, somewhat overshadowed the new government numbers that came out Monday. The NCC reports U.S. producers intend to plant 11.2 million acres of cotton this spring, an increase of slightly over 8% from 2013. Now, Mississippi has the largest percentage increase among Mid-South states, over 34% more cotton acres than in 2013. Our trivia quiz this week concerns the dairy industry in the state, and here is the question. How many milk cows are there in Mississippi as of January 1? Is the answer 10,000 head or 13,000 head, as high as 38,000 head, or even up to 49,000 head? I'll tell you the answer at the end of the markets. We turn to livestock now in our market segment. Many analysts think fat cattle are still positive despite a little retreat recently in boxed beef. Trader Don Roos thinks consumers got a little spooked in late January by rising prices, and some demand was indeed lost.
In 1 month, we moved the boxed beef, the beef at the consumer level up 20%. It was just too much too fast. So I think what happened is the packer was making about $100 a head as the beef spiked up there. He paid, like you say, $150 for cash cattle in Nebraska, $147 in the Southern Plains. And since that time frame, we've seen the boxed beef retreat. It's retreated now. It's going down about as fast as it went up. It's going back down to the high level that we were last last year. So I think it's still very much a positive market. It's a bull market, but I think it's one that we went up too fast. We lost some of our demand. Now we're starting to rebuild it, and so watch for the box beef to stabilize somewhere between probably 207, 211, and then we should have a resumption of the upside again.
On the pork side of the livestock market, heavy hogs are the main headline this month. Analyst Naomi Bloom says there's a nice balance of supply and demand going on right now.
The hogs that are coming to market right now are so heavy. They are heavy, heavy animals because, of course, when you have cheap feed, sure, why not feed them up? But the demand on the same side is so strong too. So we have a very nice balance and equilibrium of supply and demand. So that's keeping that February market just steady. But the reason that the April contract is so high and even the June contract so much higher is because they're expecting seasonally production to fall, because that's what happens in those months. And then also this PED virus is out of control. 23 states now, 23 states. And it's even up in Ontario. For the first time this week, it was found there. And now they're saying it's going to take over a year until it's under control.
Before our feature story today, let's check the trivia answer for this week. The correct choice is B. The January 1 inventory found 13,000 head of milk cows in the state, a decrease of 7% from a year ago.